Let me paint you a picture. It's been a rough couple of years, but things are starting to shift. Inflation seems to be stabilizing, interest rates have leveled off, and that job market, well, it's not strong, it is still holding at the moment. We're not in a recession, but we could be soon. And here's the interesting part. More Canadians than ever are missing payments. In Ontario, 11,000 people missed a mortgage payment last quarter. That's more than 3 times as many as 2 years ago. And while we're not in a recession, it's certainly starting to feel like one. So what's going on? Let me explain. We're walking into the single biggest mortgage renewal wave in Canadian history. Why? Because 2021 was the peak of real estate activity in Canada. Majority of Canadians locked into low interest rates between 1.59 and 2%. They felt like geniuses, and they were. Other Canadians rode the variable rate wave through one of the most aggressive rate hiking cycles in Canadian history. All of that's now come to an end regardless of which side you were on, and things are about to change. 3 to 5 year terms, that lands us right in between 2024 and 2026. And millions of Canadians are about to renew their mortgages at much higher interest rates. Let's take a look at a real scenario. Let's assume you bought a home in 2021 over in Ottawa at roughly $800,000. You had 20% down and you got a fantastic 5-year fixed rate at 1.79%. Your monthly payment, it's been around $2,297. Now you're up for your renewal. Average rates that are out there today could land you a rate maybe around 4.3%. Your new payment, $3,014. That's a $717 increase every single month. For a lot of households, that's not a small adjustment. That's the difference between breathing room and a breaking point. And here's what we're seeing. Canadians are still making mortgage payments in the majority of cases, but at the expense of everything else. Credit cards, lines of credit, car loans. Delinquency rates are rising fast, especially for those Canadians in their 20s, 30s, and 40s. Younger Canadians are getting squeezed the hardest. Wages haven't kept pace with inflation, and many of them got into the market when it was at its absolute peak. They didn't take risky loans, they took normal loans, but in a very abnormal market. So the question is, if you're one of those younger Canadians and you're stuck at the moment, what can you do about it? The answer? Refinancing. Not the reckless kind, the strategic kind that can give you a leg up for the next 5 years. What we're going to do is look at your personal situation. We're going to take a look at your mortgage, your finances, your debts, and your cash flow, and we're going to redesign your finances from the ground up. Let's take that same situation where you have a mortgage renewal coming up here shortly. Let's assume that you've got $22,000 left on your car loan, costing you $450 a month. You've racked up some credit card or line of credit debt, roughly $15,000, that's costing you $400 a month. You have the ability to just continue on with your mortgage and your payments as they are, or you refinance the mortgage. You consolidate that high interest personal consumer debt. We extend the amortization, and using that same example, your payments are capped out at $2,916. That is a savings monthly in your cash flow of $948. There's no penalty, just a little bit of additional time on your behalf, as well as legal cost in order to refinance that mortgage, but you've improved your cash flow significantly. Here's what most Canadians don't understand. Refinancing your mortgage in the middle of the term, it can cost you costly penalties. At maturity though, we don't have those penalties. So you'd be crazy to at least not run the math and see if you could improve your financial position. That's what we're here for. Because mortgage financing, it's not all about interest rate. In this circumstance, it's about getting your life back, getting out of survival mode, and using the equity that you've built over the last 5 years to put yourself in a position where you'll be comfortable moving forward. If you got a mortgage renewal between now and 2027, you've got a decision to make. You can hope that the bank gives you a break, or you can start putting together a smart, strategic financial plan. I'm Tyler Wilson from Pilot Mortgage Group. Let's run your numbers. No pressure, no BS, just clarity. You made a smart move in 2021. Let's build on that and make sure that the next one is even smarter.